Good morning, friends. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Thanks everyone for joining in the morning. As usual, this series, today's webinar topic is on masterclass on LLP. This is the third session, audit, accounts and investigation. And as usual, our panelist, Mr. Bala, is there. Friends, today, Mr. Sudhakar is busy today, so he is not able to join. But we have our own friend, Mr. Amit Gupta. You know very well, he is a very good speaker and knowledgeable person, speaking on various programs. And today's our presentation is done by Ms. Nan Handa, our Delhi partner. Thanks, Nan. Thanks, Amit, for your time. And I would like to introduce our panelists, especially, and our Mr. Bala is there today. Yeah. So, Mr. Amit Gupta is a fellow member of ICSI. He is also insolvency professional, and he is in profession for last 23 years in corporate and allied laws. And is always giving solution to the complex legal and strategical management issue. He is a science and law graduate and diploma holder in banking finance. Also regular visiting and guest faculty at various management professional institutions and regular speaker at MSOP, EDP, seminars, conference by ICSI, ICI, ICWI, Chamber of Commerce, University and management institutions. Yes, I may not introduce Mr. Bala as
we all
usual.
know each
Mr.
other.
Bala, yeah, everyone knows him now, and with a renowned person with lot of experience, most young. Thanks a lot. Let's start the presentation. I'll request Mr. Amit to say a few words on the topic, then Mr. Bala, and then Nayan, you can start. Mr. Bala, today you have to take over. Okay,
Sure.
Thank you.
No worries.
So I think I will let Nayan lead this session, and I'll chip in wherever the inputs are required for discussion. And we look forward for wonderful discussion and knowledge sharing in today's session. My throat is little bad, so I'll request Nayan to speak more, so I have a little relaxed situation. Yeah. Over to Bala, sir.
All of you. I have a great pleasure in welcoming you all for this particular session. And since we have been conducting the masterclass of LLP is very recently came and it is actually taking off. But yet, there are certain issues between the LLP and compared to the partnership and also the companies. Although we say LLP is similar to the partnership, but yet it has got a lot of advantages as like that of the company, but at the same, when we talk about the restriction in the companies, what happens, the shareholders who are the ultimate authority in terms of the appointment of the auditors, etc., and other things out there. Whereas in the LLP, it is actually left to the designated partner who are actually running the LLP partnership. That basic difference is there. And again, when we come to the companies, all the companies, the accounts, auditing is actually compulsory, irrespective of private, public, listed, unlisted, whatever it is. But in case of the LLPs, which actually get the exemption, not getting the accounts audited. But the question is, can the LLP get accounts unaudited? The answer to this question would be, even if it is not mandatorily prescribed, it is better to get the auditing done voluntarily, because when we come to the complaints part of it, when we come to the transparency part of it, when we come to the independent opinion from the auditors, that is helpful. So that is one issue. And again, there are a lot of things between the auditor and accounts, because what sort of the accounting standard is to be adopted, whether it is going to be an Indian accounting standard or it is going to be IFRS or what is it, who's regulating, all these things are all open to question. But in this respect, I think the Institute of Chartered Accountants have actually published a guidelines. And not only that, it's a NFRA is also prescribed things, we are bound by that. 9 is actually going to take over the various provisions relating to basically the accounts, audit, and the provision relating to the appointment of the auditor, reappointment of the auditor, their role and responsibility, etc. Those things we will actually see elaborately so that we can understand the things better. And added to that, again, although there is a partnership is there, there is also the possibility of, the operation mismanagement similar to that of prevailing in Companies Act. So here also there are provisions are available in case of the LLB in going to the investigation, etc. on all this thing. That part also, I think 9 is actually going to take through it. As we travel along these subjects, as usual, people who are there, participants, they can actually put up their queries, questions on the chat box, and the relevant question at the appropriate time we will be actually taking on. We will have the expert opinion of Mr. Amit, who is there with us actually. And I also see from the participants, there are a lot of chartered accountants. They are also joined today's program. So their inputs also most welcome actually to share the knowledge between amongst us. As you are all aware, this is being a knowledge sharing section. We definitely welcome your valuable inputs so that in the process, you also get your enhanced knowledge. We also get our enhanced knowledge. It's a continuous learning for all this. With this, I think I'll request 9 to proceed with the presentation. Over to 9.
Thank you, Bala sir. Thank you, Amit sir. Is it visible, sir?
Yeah, it is visible, but not in the presentation mode.
Now?
Yeah, now it is fine.
So good morning, ladies and gentlemen, and our participants. So I am CS Nayan Handa, the partner of Mehta and Mehta in Delhi branch. So it is a pleasure to be here today again and, taking the intricacies of LLP and specifically focusing on the critical aspects of the audit, accounts and investigation. So as we have progressed in our masterclass series and we are building upon the solid foundation, which is, laid down our previous sessions, which has given the exploration for the fundamentals of LLP, its incorporation. And now we are turning our attention to the, heartbeat of any business entity. It's its financial health and the regulatory compliance. But before we jump into that, I would like to thank the last presenter, Ms. Jasveen Bindra. So she has given a great understanding of how the LLP has, LLP gets started, and she has laying the foundation for what we are talking about today only. So thank you for sharing your knowledge, Jasveen. And now to begin the session, let's consider like what accounting in the world of LLP is. Accounting, auditing serve as the guardian for financial integrity and it providing shareholders with a reliable and accurate portrayal of an LLP's financial health. So it is really vigilant oversight that ensures the adherence to the accounting standards, regulatory requirement, and the internal control. So though this lens, we aim to unravel the complexities of auditing procedures, the appointment of auditors, the expensive scope that covers the financial statement, internal controls, and the compliance benchmark. So moving seamlessly into the accounts, we will navigate the various type of financial records that form the backbone of the LLP operation. So from profit and loss accounts to balance sheet, we will dissect the components that contribute to the comprehensive understanding of the LLP's financial standing. So our journey will extend to the importance of adhering to the accounting standards, emphasize the role of accounting, accurate record keeping, and how these factors, collectively contribute to the narrative of investigations. So in this dynamic world of a business, the importance of compliance with the legal norms cannot be overstated. So we will touch upon the legal aspects that governs the LLP and ensuring that our understanding is not only theoretical, but it is firmly grounded in the practical realities of the compliances. So let's understand the audit, accounts, and investigation within the LLP. So you can see there is a procedural requirement which is to be followed by the LLP under section 34, which outlines the key requirement for maintaining the book of accounts. The LLP is obligated to keep these records at its registered office, and additionally, there are specific periods which is prescribed for the maintenance of these records. So it is essential for LLP to diligently follow these requirements to ensure the transparency and the compliance. Section 34 gives, flexibility regarding the basics of accounting and cash or accrual basis. So this decision holds the significance as it determines like when the transactions are recorded. So a clear understanding of these accounting method is vital for every LLP to accurately represent their financial positions and performance. So this section gives the importance for employing the double entry system of accounting. The system ensures the accuracy and integrity in the financial statement. So to comply with section 34, LLP must maintain their book of accounts at the registered office, and additionally, there are prescribed periods for doing such thing. So in continuation to section 34, which covers the rules of the LLP, so I would like to give the emphasis on that maintaining of proper book of account is just not a good practice. It is a legal requirement which is given in the act and the rules. And the LLP Act has set a clear guidelines, and today we will specifically look into the provisions laid out in the LLP Rule 2009 under Rule 24. So let's have a look into the Rule 24 of the LLP 2009, as it is our guiding light which comes to the maintaining the records. So Rule 24(1) says that every LLP is obliged to keep the book of accounts that not only show and explain the LLP transaction, but it also meet the two crucial criteria. Firstly, and this book must disclose the reasonable accuracy, the financial position of the LLP at any given time, and think of it as a snapshot into the economic health of the LLP whenever it is needed. Secondly, these books should empower the designated partners to ensure that any statement of account and solvency which is prepared under these rules complies with the requirement of the Act. So it is a check and a balance between the guarantee that all the financial reporting meets the standard set forth in the law. So breaking it down further, the book must not just be inaccurate, but it should allow the designated person to ensure the compliance and the statement of accuracy, account and solvency requirement. So this will ensure the financial position reported is not only accurately, but also compliant with the legal framework. So section Rule 24 serves a very vital framework in maintaining the book of accounts. So moving forward, there are some specifics which is outlined in Rule 24 Subrule 2 and Rule 24 Subrule 3 of the LLP Rules 2009. So these sub-rules provide a detailed requirement for the content and the book of account and the preservation of these records. Rule 24(2) outlines what the book of account should contain. It should contain the particulars of money transaction. It should detail. There should be a detail all sum of money which is received and expended by the LLP and the matters in respect of which these transactions have occurred. So the record of these assets and liabilities must be maintained. So cost statement. The statement detailing in the cost of good purchase, inventories, work in progress, finished goods, and the cost of goods sold. And there are other particulars like which the designated partner or any partner may decide to include in the book of accounts. Now moving towards Rule 24(3), it addresses the preservation of these book of accounts. So the book of accounts that LLP is required to keep should be preserved for 8 years from the date on which they are made. And if the partner decided to get the accounts audited, the audit shall be conducted in accordance with these rules only. And the statement of account and solvency, if the partner decided to decide against the auditing, the LLP should include in the statement of account and solvency a statement which is acknowledging their responsibility for complying with the requirements of the Act and the rules, so along with the certificate in the specified form. So we can say, as per Rule 24(2) and 24(3) is not just about fulfilling the legal obligations. So it is a commitment for the transparency, accountability, and responsible financial management within the LLP. So moving forward, let's understand the Rule 24(4) and 24(6), which is covering the concerns for filing the statement of accounts and the solvency. 24(4) highlights the obligation for LLP to file the statement of accounts and solvency, which entails like every LLP must file the statement of accounts and insolvency in Form 8 with the registrar within 30 days from the end of the 6 months of the financial year to which the statement relates. So this timely filing is crucial for transparency, allowing stakeholders and regulatory bodies to stay informed about the LLP's financial health. In Rule 24(5), it is talking about the fees which to be paid to the registrar for filing the statement of accounts and solvency, which is mentioned in the Act. And to ensure this, the cost of compliance, it is clear in accordance with the stipulation of the LLP Act. And Rule 24(6) covers the process for the signing of the statement of account and solvency. Here we can see the Form 8, which needs to be filed by every LLP. And what exactly the Form 8 is, like it's a statement of accounts and solvency, and it is declaration which is given by all the designated partners of all the LLP, whatever they are liable to pay its debt in full as they become due in the normal course of business or not. So the content has a statement of solvency and the statement of accounts. The statement of account and the solvency shall be signed on behalf of the LLP by its designated partner. So if we talk about which covers the preparation of statement of account and the solvency. So section 34 subregulation 2, it outlines the first step in the process, like within 6 months from the end of each financial year, every LLP must prepare. So this statement reflects the financial position of the LLP of the financial year. Whether there is business in the LLP or not, you have to prepare the statement and file with the ROC. The statement should be prepared in a form prescribed as per the rule, that is Form 8, and this is to be signed by the partners. And Rule 34(3), Section 34(3) is talking about the filing of statements of accounts and solvency. Within the prescribed times, the Rule 2009 of the LLP states that under Section 34(2), it must be signed, it must be filed with the registrar every year, whether there is business or not. Form and manner, the filing should be done in a specific form, that is Form 8, and it must be accompanied with the appropriate fees. So this step gives ensures the transparency and the accountability to the regulatory bodies and the stakeholders, which is giving the comprehensive overview of the LLP's financial statements. So while preparing,
there is somebody is asking a question.
Yeah.
Solvency, is there any defined format by the government?
Sir, it is given under Form 8 only. I'm not able to present the full form.
But it is prescribed.
Yes, it is given under the, there are some statement of solvency. You can see in this, like Part A, it is covered the statement of solvency. It is as per the rules and the Act.
Okay.
So Bala sir, I have a supplementary question. As Nayan has rightly mentioned, the format is prescribed in the Form 8 itself. That is okay. Now, $1 million question that comes to my mind, law, to best of my understanding, nowhere says that every LLP has to remain solvent. What if for any close of the financial year, the LLP is not solvent? What kind of statements are we required to submit along with the Form 8? What does the solvency mean? Solvency per se means that my assets are sufficient to discharge the obligations or liabilities what the LLP has.
Correct, you're absolutely right. It is actually nothing but a ability of the partnership firm to meet the long-term debts and other financial obligations. You're absolutely right.
Now, let us assume a situation where either the value of assets have been lost, or maybe you have sold the goods and they have suddenly becomes non-realizable. Now, that can be a simple example. You have sold the goods worth rupees 1 crore. You were expecting the money to be realized, and now suddenly it has become a bad debt.
Okay.
And for 31st March 2024, your solvency status is gone.
Hmm.
What kind of statement are we going to file? Are we saying, because Form 8, the wording, if then you can just share the screen on the Form 8 itself so that we can correlate what kind of statement we are giving. Let us. So the statement that we are mentioning over here,
Yeah.
we are saying ki we being the designated partner or authorized representative of so and so LLP do solemnly affirm and sincerely declare
Hmm.
that we have made a full inquiry into the affairs of this limited liability partnership foreign LLP, and that having done so have formed the opinion that the LLP or foreign LLP is not able to is not able to pay its debt into full as they become due in the normal course of business. So if we see the form itself is giving you the window to declare. Now, question, if we extend little further, what is the consequence if I declare that my company is not able to pay its debt in full as and when they become due in the normal course of business? Is there any penal obligation, or is there any prosecution? Is there any other consequence? Or is it just a data collection exercise from the regulatory perspective, that regulator want to understand how many LLPs are solvent, how many LLPs are not solvent? To best of my understanding, there is no consequence other than, because insolvency and bankruptcy code provisions are now in force. So if any creditor wishes to invoke the provisions of section 7, 9, 10 of the insolvency and bankruptcy code, so basis this declaration, that gives a ground for the LLP or to any creditor, whether operational creditor or to a financial creditor, to invoke the insolvency provision basis that declaration itself. But other than that, if I say that if I am temporarily not solvent, that does not mean that there will be any penal consequence to me. But yes, your obligation, because under section 43, 45, 50 and 66 of the Insolvency and Bankruptcy Code, where it is prescribed that certain transactions which are preferential, which are undervalued, those transactions, if carried out during the twilight period. Now, when you know that your LLP, your business entity is not solvent and still you are continuing your business, that means you are taking a responsibility on your own head with regard to unlimited liabilities, with regard to the fraud that you are playing under 66. That is what I am able to understand by relating the provisions of declaration of solvency with the Insolvency Act.
Yeah,
Any
your understanding is actually right. But here, as you rightly say, there are two things.
Yeah.
One thing is there, you touch upon the word called fraud. Anything which is involved fraud, anything done with intentionally defraud, then there are consequences of the action which are actually there in the Companies Act.
True.
But at the same time, if everything is done in the normal course of the business with exercise their due diligence, if the company is unable to be insolvent, because maybe they are due to various reasons, the customers are not paying, outstanding debts are there, some situation which has occurred, like COVID, which has happened very recently, all such things which actually contribute. In such a case, I think, according to me, by looking at the Companies Act, they have to make this known to the people, because company is not insolvent, company is actually facing a problem. And probably they have to also highlight what are the steps they are actually taking to improve the solvency. So long as it is not done with the intent of the fraudulent activities, I don't think there is any penal actions will be there. Even that is the say in the Companies Act as well. If the directors are acted in the good faith, and if they taken the exercise the due diligence, they are not liable to that extent. That is what it is. But at the same time, as you rightly say, you touch upon a right point. How long they can continue the business without remaining in the solvency? That is the open.
I'll just tell one basic difference. What I
Yeah.
could understand being an insolvency professional also, when I read this subject, so there is a very thin line difference when you are in a stage when the designated partners and the partners are fully aware that my entity is presently going through the phase of insolvency. Then your objective, the objective of designated partner is not just limited to the maximization of value of your contributor or your member or your partner, but it extends to the stakeholder. And stakeholder is a large word which includes your creditors, which includes your other people, maybe your employees as well. So that is the difference, and that is the distinction which has been carved out in section 66 of Insolvency and Bankruptcy Code by invoking a concept of twilight zone. And twilight zone is a period starting from the date when you are aware that you are no longer solvent and you are doing business. Of course, you are doing business with a hope that you will be able to revive, but your focus changes. Your focus is not to give a benefit to your partner alone, but your objective with which you should run the business is to protect the interest of all stakeholders, including your creditor, including the regulator, including your bank, including the other people. That's the only difference I am saying. And if you are not doing so, then you may be held guilty for fraud. That is what the scope of section 66 is. I think that's what I am able to understand, and we can, I think, park it over here and move forward. And one more point, I think what Nayan mentioned, I think before we proceed, the distinction between the books of accounts, what we are maintaining in the limited liability partnership firm and in the company. In case of company, you don't have a choice to maintain the books of accounts on the cash basis. Whereas in the case of limited liability partnership, Nayan has very categorically mentioned in the first slide itself that the law itself gives you the power to maintain your books of accounts on the cash partnership is a hybrid kind of entity, which is a hybrid of a partnership firm as well as a company. So you are given a privilege what are available for a partnership firm, and you are also given the advantages of a private limited company. So that's how the merger has been done. You are required to maintain the books of accounts on the double entry system, but you are given a flexibility to maintain your books of accounts on the cash basis. Now, in current time, how many people will be willing to maintain the books of accounts on the cash basis or not? That's a choice that is given to the entities, but yeah, flexibility is there. Now, even the non-profit institution even are maintaining the books of accounts on the accrual basis because of its own advantages. That's a different matter, but as far as the legal framework is concerned, yes, the law gives you that kind of flexibility. I think, Nan, you can.
Yeah, absolutely, you are right. But only thing which I would like to add here, when we talk about the solvency, again, we are talking about meeting the long-term debt. That is what we are talking about it. As you rightly said in between, temporary. So that means there is a liquidity crunch. The liquidity crunch is actually a temporary which can be overcome. But the solvency, if it get affected, especially in the long-term basis, that cannot be. I think that will definitely make a difference when you are touching upon and invoking the provisions of the IBC Act. That is
Yeah.
what I think, in my opinion. But anyway, we can also invite if there are any comments, because we have the chartered account like to add in on this, please. Any chartered accountant forum? Rajagopalan?
Yeah, I think we can move forward.
Yeah.
Comments may come over a period of time. We can always come back and reinitiate the discussion on this point.
Yeah.
Just one last point, the point that you were mentioning, temporary liquidity issue.
Yeah.
Unfortunately, insolvency law
Hmm.
does not make any distinction between the temporary disability or permanent disability to meet your obligations. Now, is a state where you are not able to repay your legitimate dues or legitimate claims or legitimate obligations within the prescribed frame of time. So maybe I am having thousands of crores of assets, but I am not able to pay a liability of 1 crore. Then I am insolvent. And anyone who is having a right under insolvency and bankruptcy code can take me to the tribunal for the purpose of commencement of insolvency and bankruptcy against me. And for
No,
the
you're right. You're right. IPC rules are very clear. You're right.
so I'm why I thought to bring in, because I could not see what could be the other reason other than, as you rightly mentioned, that regulator wants to collect the data. And important is that why regulator wanted to collect this data, because in 2008, when this concept of limited liability concept was mooted, government proceeded with very caution, as they have proceeded with very caution in the case of one person company when this Companies Act 2013 was launched. Similar caution was there in 2008, because prior to that, there was no concept of limited liability partnership in India. It was a concept which was prevailing globally. So India was doing a kind of experiment to facilitate the required investor entity in India. So government was little cautious that this kill should not create any kind of disparity, detriment in the society, or create any kind of fraud situation in the society. So they thought to make it appropriate to take a declaration of solvency kind of in annual basis from the respective entity, so that they are aware as to where the set of entities are going, where we stand. I think that time insolvency law was not there. So it was definitely not with the objective to invoke the insolvency law. What was the objective? Perhaps that was limited to approach with a little bit of caution, I think.
Yeah, there is Vineet would like to know from you, what
Sir.
is the implication of the Part A of the Form A and the IBC?
Part A of which form?
I think he's talking about the LLP Form A, what 9 has presented.
Nayan, can you just share it on the screen? All right. Statement of solvency. That is what we were discussing. Part A is the statement of solvency, where we, the designated partner or their representative, are making a solemn affirmation and declaration that they have made full inquiry. Full inquiry means what? Full inquiry means, let us say you have sold the goods of 1 crore to some debtor and he has not paid. Let us say a year has made full inquiry. You can say, "Bhai, I have checked the book of accounts and 1 crore is recoverable. It is a sundry debtor appearing in my books of accounts," right? So as per me, the company is solvent because I am having a receivable of rupees 1 crore. I have a liability of rupees 80 lakhs. So I am solvent. But full inquiry means I have inquired whether these sundry debtors are actually receivable or not, actually recoverable or not. Then I say, yes, I have done the. So you are taking a responsibility that I have done full inquiry, maybe in respect of assets also. So maybe those assets are not kept for sale. If sold in the market, will fetch out the value which is going to be more than the long-term liabilities and the obligation what the LLP has. That is the intention with which this Part A has been, and there are many other declarations, but we are limiting our discussion because so far we have discussed this particular part. I think there are few more comments.
Somebody has actually put up, is it not a good practice that can be made applicable to all the companies and partnership firms to follow? Many company directors are feeling that signing with a Monteblanc pen in the corporate culture, but do not even maintain minutes of the books of the fixed assets register, etc. and other things.
Yeah, absolutely right. What the observation anyone has, I think C. Ananda Kumar has made, it is not a good practice that can be made applicable to all companies and partnership firm to follow. Many companies directors are feeling that signing with the Mont Blanc pen in culture, but do not even maintain the minute book and the fixed asset register. Absolutely right. Ideally, because as I mentioned, because the company is a kind of entity which has been in existence for centuries now, even prior to companies at 1956, 1913, and even prior to that, the company form of business structure was there in existence, not only in India, but otherwise outside India also. But when LLP was being experimented, the government was little cautious that it should not turn out to be a bit kind of a fraud situation in the society. It should not take away certain benefits to the society people. So that's why these kind of cautions have been done, which has been perhaps missing in the case of a company or any other kind of institution or the entity. That's the reason. But if LLP is subject to tax audit, mercantile system is compulsory. Yes, we are talking about.
We are talking about the same thing. Tax audit is compulsory. Anyway, any form of the organization is subject to the tax.
Solvency mainly deals with the ability to pay off long-term debt.
Yeah, that is what subject matter is.
As explained by Amit, if LLP is not in a position to pay debts, then they become insolvent as per IBC Act. However, is solvency defined separately in the LLP Act? If not, then this should be interpreted as per General Clauses Act. See, there is nothing in law that that defines what is the meaning of solvency as far as the LLP Act is concerned or any other law is concerned. Insolvency and Bankruptcy Code has defined, even not defined the term insolvency. It can be interpreted by reading the provisions of Insolvency and Bankruptcy Code as to what is the meaning of insolvency. It says that if you are unable to pay debt of prescribed amount, you will be subjected to commencement of CIRP. That's it. It does not mean that the insolvency term has been defined. So what I am only trying to say that if you declare that if I file, there is a XYZ LLP who has filed the Form 8 and Form 8 says that I am not able to pay the long-term debt. What does that mean? If I am a creditor, if I am a banker who has lent you, I'll say, boss, you yourself are admitting that you are not able to pay. You have to pay me 1 crore. I should initiate the insolvency proceeding against you. He will go and file the application before the National Company Law Tribunal, adjudicating authority, and adjudicating authority will also take cognizance of your Form 8 and will admit the application. I am only trying to correlate what could be the consequence.
That is right. What you are saying is correct. Again, when we come to the creditors, again, the question is, as you rightly said, if I have recoverable debts, so long as it has not become bad debts.
Yeah.
So long as I have realizable assets with me. If the creditors is confident, okay, today they are not able to pay, but however, we will be able to get the money maybe a little later. If that is the case, he may not go for the proceeding of IBC. Again, it is coming to the judgmental of the creditors, whether really the company is unable to pay or company is having a temporarily a liquidity problem and they will overcome. That is the question there.
So that is true for even any company also. Today,
Yeah.
there are lakhs of companies which are insolvent presently. But if the insolvency proceedings have been initiated against all those lakhs of companies, answer is no. Even bankers decide, even the lenders decide whether to initiate insolvency or not. That is their choice. That is
Correct.
not the law. That is not compulsion. Yeah. And then you can move forward.
Yeah.
Yeah. Thank you, sir. Thank you for reflecting the practical aspects on this statement of solvency and the Form 8. So now we are, moving our focus on the very crucial aspect of the LLP operations, that is the audit of accounts. So the audit of account is a very crucial aspect which is governed by Section 34, subsection 4, and the Rule 24(8) of the LLP Rules 2009. So Section 34(4) mandates that the accounts of LLP shall undergo an audit in adherence to the prescribed rules. Expanding on this, Rule 24(8), which it provides a very structured framework for the audit process to be followed. So according to the first proviso of Rule 24(8), the LLP meeting the specific financial thresholds are exempted from mandatory audits. So specifically, if turnover of an LLP does not exceed 40 lakh rupees, or its contribution does not surpasses the 25 lakh rupees in any financial year, it is not obligated to undergo an audit. So the exemption provides a degree of flexibility and acknowledging the varying scales and the structures of LLP. And however, the second proviso of the rule introduces an interesting nuisance, like even if an LLP falls within the exempt category, the partners have the discretion to opt for an audit voluntarily. So in such cases, the audit must strictly adhere to the rules which is outlined in Rule 24(8). So conversely, the third proviso addresses the scenario where the partners chooses not to audit the accounts of the LLP. In such instances, the LLP must include in its statement of solvency and account that the partner should acknowledge their responsibility for complying with the act and the rules regarding the preparation of book of accounts. So additionally, a certificate in the specified Form 8 is required, which is ensuring the formal acknowledgement of the adherence to the regulatory requirement. So in this context, the LLP covers the appointment of auditor, which is meticulously regulated process outlined again in Section 24 of the LLP Rules 2009, and Section 24(9) unequivocally states that only the chartered accountant in practice qualifies for the appointment as an auditor of an LLP, which is emphasizing the expertise required for their crucial role. So moving on the timeline and the procedures for specifies that auditors should be appointed for each financial year of the LLP, ensuring a consistent and the regular review of the accounts. And Section 24(11) sub rule 11 delineates the various scenarios in which the designated partners may appoint the auditor. So these includes the initial appointment before the end of the first financial year, at least 30 days prior to the end of subsequent financial year, to fill a casual vacancy or to replace an auditor who has removed. So interestingly, Section 24 subsection 12 introduces a contingency plan. So if the designated partner who hold the primary authority for appointment under Section 24(11), then it fails to make an appointment, the partner themselves reserves the right to step in and appoint an auditor. So furthermore, like the 24(13) outlines the duration of an auditor term. The auditor shall hold office in accordance terms of the appointment and continue to do so until either new auditors are appointed or they are reappointed. So this ensures the stability and the consistency in the audit process and allowing the auditor to comprehensively fulfill their responsibility. So we can see that Section 24 of the LLP Rules 2009 gives the governs the appointment of auditor and safeguards the integrity and the expertise required for this crucial role in ensuring the financial transparency and the compliances of the LLP. The process of auditor's reappointment is governed by the specific provisions which is outlined in 24, and let's see this. And 2414 provides the clarity on the reappointment of the auditor. And in the absence of any specific appointment under Subrule 11, any auditor currently in office is deemed to be reappointed. However, this automatic reappointment comes with the two essential conditions, like first, the LLP agreement must not explicitly require a fresh appointment. And secondly, a notice of disagreement must not have been given by the majority of the partners who have determined that the auditor should not be reappointed. So these conditions ensures the reappointment, which is aligned with the intentions and purposes of the LLP. 2415 reinforces that the provisions are applicable without prejudice to other rules which is related to the removal and the resignation of auditor in this chapter. So this underlines the importance of following due procedures in matters of removal and resignation while still respecting the automatic reappointment process. Now, additionally, 2416 details the requirement for a notice which is specified under clause B of subrule 14. This notice expressing the majority's decision not to reappoint the auditor, which may be present in either hard copy or the electronic form. It is crucial that the notice is authenticated by the person or a persons providing it, adding an extra layer of formality and accountability to this process. So here we can see, like, ensure the clear and the regulatory framework for the reappointment of the auditors in the LLP and promoting the transparent procedure for the accounts. Now, next slide covers 2417 and 2418, which provides the flexibility in determining the remuneration of the auditor, which is appointed by the LLP. And the remuneration, it can be fixed by the designated partners or by the following procedure. Yep.
Someone is asking a question. What happens in a case where an LLP has two partners, where one partner wants to remove an auditor and the other does not agree? Will the auditor continue?
So
we have to go with the, yes, sir, please answer.
Nayan, please. Go ahead. Nayan, please go ahead.
I have no practical, thought about this. Like, I can just suggest, like, if the majority consent should be there, and if there is only.
Yeah, absolutely. Nayan is right. See, limited liability partnership is essentially governed by the provisions of LLP agreement. So whatever you prescribe in your agreement, whatever is agreed between the partners, that becomes your Bible unless restricted by law.
You are absolutely right, Amit. That is what, if we actually recollect in our very first session, we talked about the LLP agreement.
I'm sure,
we said actually the LLP agreement drafting is very crucial, visualizing all these sort of the situation in order to not to land up any problem.
Absolutely.
That is where we actually said in the very first.
Unfortunately, in my experience, LLP agreement is a standard copy-paste document.
You're right.
99% situations, it is not even, in many cases, you will find out even the partner's name are also appearing incorrectly because there is a standard copy which is available in Google, and you just copy paste and change the name of the LLP and partner and registered office and object, and you just use it. Unfortunately, it is not the right practice because LLP law gives you so much of flexibility to suit to your own requirement as to what you want from that particular entity and how you want. Anything and everything which is not restricted by law, which is very few. Only some 4 to 5 areas are there in the LLP law, which says that even if you change in the LLP agreement, this will prevail. Otherwise, everything is given the flexibility to the partners. If you decide how you will, like if I give you the example of removal of auditor. So if you want to remove the auditor in case of a LLP, then law prescribes you a particular process unless the partners have themselves decided something in the agreement. So same case is in respect of your query. So essentially it will boil down to the powers what you have decided in respect of. So if your LLP says that so-and-so designated partner or any one designated partner will have the power, so you have the power to remove that.
In fact, somebody has actually put up a very valid question. Are these people a designated partner or simply partner?
That's also a question, because if you have given, let's say, power to your designated partners to remove the auditor, then partners' obligation, the partners' rights are gone.
Yeah, that is right. It is only a designated partner.
So everything means majority questions in the case of limited liability partnership are dependent on the kind of agreement that you have executed. And even in case of limited liability partnership, what we have been suggesting, I'm sure in previous 2 sessions you must have already discussed the nitty-gritties thereof, how the decision, how the governance framework should be installed in the limited liability partnership, so that the partners or the limited or the designated partners does not land up in any trouble tomorrow. So
yeah, that is what we discussed in the very beginning. We spent quite a amount of the time on drafting of the LLP agreement, the role of the professional who has to visualize the various situations and see the smooth running of the LLP. You are rightly touched upon this point. Yeah.
So what fits into one particular situation may not fit to the other situation. That also has to be borne in mind. Maybe one very customized LLP agreement, if I give it to you and you adopt it for your situation, it is a complete failure, because I have drafted it to meet the requirement of my client, which may not be your case. Your case may be different. So you have to be little vigilant and cautious while doing that kind of copy paste. And one more point, I think, Nayan, when somebody was asking a question also, and Bala sir also touched upon that point in the opening remark. What if my turnover or my contribution is below prescribed threshold? I am, of course, not required to do the appointment of an auditor. I am not required to present the audited accounts. Bala sir is suggesting.
She is discussing that it is coming in the future. She is talking about the exempted things, etc., which is available, that is there.
Yeah, I think.
And someone has actually put up the comment here. Since there is no majority in this case, that is the removal of the auditor, there are only 2 partners are there. The existing auditor will continue unless there is a consensus to remove the auditor.
Yeah, absolutely. Absolutely. Unless there is something otherwise provided in your agreement.
Yeah, that is right. Yeah. Yes, fine. Move forward.
Yeah, thank you. I just lost the connection in between. So
no problem,
let's move towards.
Yes. You are there, your slide is there very much. Yeah.
So let's move towards the remuneration and the removal of auditor, which is given in section 2417 and 2418. So 2417, it provides the flexibility and determining the remuneration of an auditor, which is appointed by the limited liability partnership. So the remuneration can be fixed by the designated partners or by following the procedures which is outlined in the LLP agreement. So this allows for the adaptability in deciding the compensation for the auditors, ensuring the alignment of the LLP's internal governance framework. So section 2418, the rules provide surrounds the removal of an auditor are detailed. So according to 2418, a partners of an LLP possesses the authority to remove an auditor at any time and providing the procedure which is specified in the LLP agreement. It is to be followed. So this emphasizes the significance of having a well-defined process for such an actions in the LLP agreement. However, in a case where LLP agreement is silent on the removal of the procedure, so 2418B comes into the play. And in such a situation, the removal of an auditor requires the consent of all the partners. So this ensures the unanimity amongst the partners when the LLP agreement doesn't provide any specific guidelines for the removal process. So we can see that 2417 and 18, it has established a well framework for determining the auditor's remuneration and given the procedure for the auditor removal and striking a balance between this flexibility and the internal governance. So now we are going to explore the provisions governing the auditor resignation and the non-reappointment as which is framed in 2419 of the LLP Liability Partnership Rules 2009. So 2419 delineates the procedure for an auditor to resign from their office. And according to 2419 Subrule A, and an auditor can resign by depositing a written notice to that effect of an LLP's registered office. And this straightforward process ensures a formal communication of the auditor's decision to resign. Subrule 19 Part B, in cases where an auditor is unwilling to be reappointed, they must provide a written notice to that effect of the LLP's registered office. So importantly, this notice must be deposited not less than 14 days before the end of the period allowed for the appointment of a new auditor. So this advance notice period allows for a smooth transition and ensures that LLP has a sufficient time. 2419C add on the additional requirement for clauses A or B. The notice must be accompanied by the statement of detailing the circumstances which is connected with the auditors who is ceasing to hold the office. So this statement provides the transparency and clarity regarding the reasons what is behind this resignation or the non-reappointment. So lastly, 2419D specifies that the auditor's term concludes as in the date of notice, which the notice is deposited or any later date which is specified in the notice. So this ensures a clear and a precise end point for the auditor's tenure. 2419, gives a structured process for the auditor's resignation and the non-reappointment. So this is the regulatory landscape which is introduced by Section 34A of the LLP Act as inserted by the LLP Amendment Act 2021.
9, there is somebody has put up a question. They are asking actually whether the term contribution is actually defined, whether the current account of the partner is to be considered as a part of contribution. I think contribution is actually what each partner contribute as agreed between themselves as per the agreement. Anything over and above if it is there, that will be actually treated as a loan from the partner, according to me. Is that correct?
Yeah, absolutely. So by default, current account balances will not be considered as a contribution. However, if partners agree as per agreement that from time to time, whatever balance will be there in their respective account, that will also be part of the contribution, then that can be considered. But ideally, we don't advise you should maintain your current account separately and you should maintain your contribution account separately. And because otherwise what will happen, your contribution will keep on fluctuating, which is not the good situation. Correct. So you should have your contribution defined that yes, 1 lakh each partner will contribute, and over and above let's say you are giving 5 lakh rupee each partner, then that will be considered as a loan to the LLP as rightly advised by the Bala sir.
Yeah, correct. Current account is never considered. Here somebody has actually put up, is to be taken fixed capital as mentioned or current account partners. This is what we discussed just now.
Can be added. Maybe you have, let's say, balance of further 10 lakh rupees. You have initially contributed 1 lakh and now 10 lakh is outstanding in respect of certain partners. With choice, they can agree that this amount which is outstanding for repayment to the partner may be now considered and adjusted towards the contribution. That is possible, like in the case of a share capital. There is nothing wrong. It can be done, but current account ideally should not be treated as a part of the contribution.
Another question has come. Will there be any issue if the initial capital contribution as to the LLP deed is 10 lakhs and the designated partner have brought only 5 lakhs till 31st March?
That's a very interesting question. And in case of a company, we struggle this kind of problems a lot, that two partners joined hand and they decided to form a company with 1 lakh rupees of capital to contribute 50,000 each. And suddenly after incorporation of an entity, the dispute arisen and one of the partner is not willing to contribute to his part, that is 50,000, he is not willing. What will happen? In such a situation, there is virtually no option available then to make a situation of a compromise where you transfer the shares to someone else and someone else is putting up the money, and then you are able to meet the requirement of contribution and move forward with the company. In case of a limited liability partnership, unless you define a time frame in which the contribution has to be received by the LLP. LLP Act does not per se specify any time limit as against the provisions under the Companies Act. Companies Act says 180 days you have to file the certificate of commencement of business, declaration with regard to commencement of business, right? And unless you file that, you cannot commence the business. In case of limited liability partnership, I cannot see any such kind of requirement. So if let us say we two people have formed a limited liability partnership with 5 lakh rupees contribution by each, and we have not yet contributed, or we have just contributed 1 lakh rupees each, 8 lakh rupees still is to be received. In how many years we are required to receive? If my LLP agreement is silent, I can continue that liability for even 1 year, 2 year, 3 year, 10 year. That money will remain as a receivable from the partner, but that will not be accounted for in your books of accounts, and there will not be any difficulty as far as the continuance of your business is concerned, because there is no restriction.
Yes, Nain.
I think there are a couple of more.
I think that is relating to some audit and other thing, and then we'll go, since it's moving forward, we'll take this. Yeah.
Yeah, Brahim, it does not really affect, as I explained earlier also. So whatever amount you have received, you will reflect in your Form 11 and move forward. There is absolutely no challenge. If the amount of contribution is revised and revised amount exceeds the limit of 25 lakhs in the financial year 23-24, audit will be applicable from which financial year? The year in which the contribution crosses the particular threshold. Let's say your contribution or turnover crosses the threshold in the year 23-24. So audit will be applicable for 23-24. Is that right, Bala sir?
Yeah, you're right. Absolutely right. does auditor require to qualify the report for the non-short of the contribution by the partners?
Yeah, he can, but that depends. If let us say my agreement itself says that we have agreed to contribute so and so amount, but that amount will be paid as and when LLP demands the same. Then what happens?
Correct.
LLP has not demanded. It's like share application money. You have not demanded the money to be paid, then that money will be payable as and when the LLP demands. So it depends again. Again, I'm repeating the same thing, that lot depends what you have mentioned in your agreement. So if your agreement is silent, then yes, auditor is duty bound to make that as a comment that that money has not been received. But if there is nothing and the law gives you the flexibility to receive the money in tranches, you can receive the money in tranches. Sir.
Yeah. Yes, Nine. I think probably she.
Yeah, sir, I need 1 minute to, present
Yeah,
the
yeah,
slide.
sure.
I lost the connection.
You can take a couple of more questions if there are by the time.
Somebody is saying actually, can part B of the Form 8 be elaborated? And I think we discussed this contribution we talked about. Yeah. Now you have to change it to presentation mode. Yeah, it has come.
I'm facing trouble with the internet connection here, and I think
No
I
issue.
don't know why. Yeah, so sorry for that.
No
So
issue.
now,
It's all technical issue. It happens sometimes. Yeah.
so this is the regulatory landscape which is introduced by Section 34A of the LLP Act as inserted by the LLP Amendment Act 2021, which is effective from the 1st April 2022. So Section 34A empowers the central government in collaboration with the NFRA, that is National Financial Reporting Authority, which is constituted under the Section 132 of the Companies Act 2013 to prescribe the standards for accounting and auditing. So this collaboration leverages the expertise of NEFRA to an entity tasked with ensuring the quality and reliability of the financial reporting in the corporate sector. So Section 34A prescribes a standard of accounting which covers the norms and principles and governing the preparation and presentation of the financial statements. And it also covers the standards of auditing. The central government, in consultation with the NAFRA, has given some, standards of auditing and aligning them with the ICAI. And these standards ensure a systematic and rigorous audit process, enhancing the credibility and reliability of the financial statement for the specific class or the classes of LLP. So this regulatory framework introduced through the LLP Amendment Act 2024, which gives the commitment to enhance the quality and reliability of the financial reporting within the LLP ecosystem. So the annual filing of LLP is required to file its annual statement of accounts, insolvency, and an annual return in the following two e-forms, like which is stipulated in the time. So this covers Form 11 and Forms 8. So Form 11 covers the annual return of the LLP, and the last date of doing is 30th May of the succeeding financial year. And the Form 8 is covers the statement of account insolvency, and the last date of filing the same is 30th October of the succeeding financial year. So it's Section 35 of the LLP Act gives the outline of crucial requirement to be covered for filing the annual return. And Section 35(1), it gives the mandates that every LLP must file an annual return with the registrar within the 60 days of the closure of its financial year. And this annual return must be duly authenticated and submitted in the prescribed form and manner, which is accompanied by the necessary fees, which is stipulated in the regulation. So, however, the consequences of non-compliance is addressed in sub-regulation 35(2). If an LLP fails to submit its annual return within the specified 60 days time frame, the LLP itself and its designated partners become liable to the penalty. So the penalty accrues at the rate of 100 rupees per day for each day of the failure persist, and the total penalty is subject to the cap of 1 lakh rupees for the LLP and the 50,000 rupees for the designated partners. So this stringent provision is designed to encourage the timely and the accurate reporting of the financial transparency and accountability in the LLP, and it underscores the significance of the regulatory timelines and fulfilling the annual filing obligation to avoid the penalties. So here you can see form number 11, which is to be filed as the annual return of the LLP. And the certification of Form 11 to be done by the company secretary in whole time practice or by the designated partners of the LLP. There are some the criteria given, like in case if the total obligation of contribution of the partnership of the LLP exceeds 50 lakh or a turnover exceeds 5 CR, then the certification by the company secretary is required. And in case the total obligation of the contribution of a partner of LLP does not exceeds 50 lakh and turnover does not exceeds 5 crores, the certification of Form 11 can be done by the designated partner of the LLP.
There is a question has actually come. As per the annual return in the Form 11 required to give how much contribution has been subscribed and actually brought in by the partners. Hence, in case of the short or non-payment of the contribution, will it be liable for the contribution? This is exactly the point Mr. Amit was actually talking about it. Everything will actually depend upon the LLP agreement, what you have actually agreed upon. Because the question liability of the contribution comes only with the timely compliances. If, as he rightly said, if the time is not mentioned, they agree to contribute over a period of time, then there is no non-compliances. And again, as and when the LLP demands, then they will contribute. Then LLP demands, if they don't contribute, then only the liability comes, the consequences comes. Otherwise, it doesn't come. Am I right, Amit?
Yeah, absolutely, sir. I'm sorry, I was on mute. Yeah, absolutely. You are right. If I'm audible?
Yeah, very much.
All right.
Yeah.
Yeah, absolutely. Your understanding is correct. You have explained perfectly. All right.
That is why we again emphasize in the very first session, the drafting of the LLP agreement need to be done very, very carefully with the help of the professional, where we have to go into visualize each and every situations and to provide a solution. Otherwise, we will end up the problem of smooth running of the LLP. Yeah. That is what Amit also said very clearly. He also emphasized the drafting of the agreement.
Yeah, I'll just take a minute because this is so very important. I always feel the necessity to explain the methodology, how the professional should approach to draft the agreement. I'll not take more than 30 seconds.
Sure. Please. We would like to have your knowledge, sir.
All that professionals need to do is run through the LLP Act and the rules. Find out which are the provisions which mandates that irrespective what is mentioned in your LLP Act, irrespective what is mentioned in your agreement, these provisions will prevail. Now, you make one table for the same. Then you find out which are the provisions which are giving you the opportunity to have a discretion. Then you figure out what all discretions you have. Let's say there are 20 areas in which you have a discretion. So what are the options for making a discretion? Then you select which one is best for your particular case. Now, then by combining this, you will be able to complete your agreement. Now, you just find out these are the 50 points on which the agreement has to be drafted. Which are areas which you cannot touch? Which are the areas where you have a discretion? Which are the points which you want to incorporate, which you want to draft in which particular manner? Now, so once you have the clarity on this, then you will be able to draft perfect. As I repeat again, what is best for my client may not be best for you. So don't think that this agreement was drafted by Mehta and Mehta, so it must be good. It may be good, but it may be good for a situation which may not be your case. So you have to be really clear on this particular point. I'm repeating it again and again because many times we think that big law firms have created an agreement which may be best for our situation, may not be true all the time. Now, that's the point. I think then you can move forward.
So here are some additional provisions which is related to the annual return, which is laid down in the Rule 25 of the LLP Rules 2009. So according to Rule 25(1), for the purpose of complying with Section 35(1) of the LLP Act, every LLP is required to file its annual return with the registrar, and this filing should be done using Form 11. So moving on to the Rule 25(2), which specifies the conditions outline the LLPs with varying the financial scales. An LLP having a turnover up to 5 crore rupees during the corresponding financial year or a contribution up to 50 lakh must accompany their annual return with the certificate from the designated partner and excluding the signatory to be the annual return. So this certification confirms the accuracy of the information provided by the annual return. So conversely, for LLP exceeding these financial thresholds, the annual return must be certified by the company secretary in practice. So additionally, in Rule 25(3), which specifies the fees to be paid to the registrar for filing the annual return, and these fees are outlined in detail given in the Annexure A. And these provisions under Rule 25, refine the annual return filing process. So here we can see the fees, which is to be, paid for filing and registering of recording any documents, form, statement, notice of statement, solvency, annual return by the Act, or these rules required. So you can see the limited liability partnership whose contribution does not exceed 1 lakh, they have to pay rupees 50 at the time of filing the annual return. So the LLP whose contribution exceeds rupees 1 lakh but not exceeds 5 lakh, the 100 rupees has to be paid, and so on. So the fees is depending upon the contribution. And so there is a specific scenario which is outlined in the proviso to Rule 25(2) of the LLP Rules 2009, inserted with effect from March 4, 2022. And the proviso addressed the signing of the annual return when a liable LLP is undergoing the corporate insolvency resolution or liquidation, provided that certain financial thresholds are met. So in cases where the corporate insolvency resolution process or liquidation has been initiated against the LLP under the IBC 2016 or the Limited Liability Partnership Act 2008, the LLP has a turnover up to 5 crore rupees during the corresponding financial year or a contribution to the 50 lakh rupees, the annual return can be signed on behalf of the LLP by the specific professionals. So these professionals include the interim resolution professional, resolution professional liquidator, or LLP partnership administrator. So importantly, in such a cases, no certification by the designated partner is required for the annual return. So this provision acknowledges the unique circumstances during the corporate insolvency or liquidation, which is streamlining the signing process by involving any professional directly overseeing the resolution or the liquidation proceeding. So it serves as a practical measure to facilitate the smooth handling of the annual return requirement during these challenging phases in the cycle of LLP. So these are the fees for filing any form or a statement of account or solvency or a notice or a document which is to be by foreign LLP has to submit. So now with the above provisions, we can cover the main highlights of the LLP. Like LLP should maintain the proper book of accounts. So this is what we have gone through till now. The minutes should be maintained to record the minutes of meeting of partners and managing executive committees of partner. And any change in partner and designated partner should be filed electronically in Form 4 within the 30 days of change with the fees. And such admission and cessation shall be alter the mutual rights and the duties of partners shall change. However, hence the supplementary LLP agreement will be required to file in Form 3 and within 30 days change with the fees. Statement of accounts and solvency is to be filed annually in Form 8 with the required fee. It is to be filed within 30 days from the expiry date of the 6 months from the end of the financial year, that is 30th October of the preceding financial year. And annual return should be filed with the ROC in Form 11 with the fees and incorporation documents So these are the additional fees for the delayed filing of the documents. If there is a delay up to the 15 days, then the one time of the normal fee should be there. And more than 15 days, the two times of the normal filing fees, and the delay continues, the fees, get increased. So there are some penalty for failure to comply with the provisions of financial disclosures and audit, section 34 of subsection 3. Any limited liability partnership firm, if any limited liability partnership firm fails to comply with the provisions of section 34 subsection 3, and its designated partner shall be subject to a penalty. So the penalty accrues at the rate of 100 rupees of each day during which the failure persists, and however there is a maximum limit set for the penalty, which is not exceeding 1 lakh rupees for the LLP and the 50,000 rupees for every designated partner. And 34(6), if somebody fails to comply, then the LLP outlined the provisions in subregulation 1 and subsection 2 and subsection 4 of the section 34, and it shall face the legal consequences. So LLP can be punished with a fine, but less than 25,000 rupees, but exceeding up to 5 lakh rupees. Simultaneously, each designated partner of such non-compliant LLP may be subject to a fine ranging from not less than 10,000 rupees to the maximum of 1 lakh rupees. So these penalties gives the importance of timely and the accurate compliance with the financial disclosure and the audit requirement.
And I'll take a pause. Go to the previous slide. There is something important for us to understand: the distinction between the two provisions, 5 and 6. Of course, there is a scope is different. One is for non-compliance, which is relating to accounts and audit, and one is with regard to the compliance of provisions of section 34. What is the distinction? One is criminal offense and the other one is civil offense. Wherever the term penalty is coming, that means the government has decriminalized these offenses and the adjudicating authority has a power to levy penalty on you. That means if you go 5 says that any limited liability partnership which fails to comply with the provisions of section 34(3), such LLP and designated partner shall be liable to a penalty. It is not fine. It is penalty of 100 rupee for each day during which such failure continues. Subject to, now you will be liable, means if LLP is one entity and there are two designated partner, so 100 rupee each day will be the LLP, and if there are designated partner 2, so each designated partner will also be subjected to 100 rupee for each day during which the default continues, subject to maximum of 1 lakh rupees for LLP and 50,000 rupee for every designated partner. So 1 lakh is a cap on LLP and 50,000 is a cap on designated partner. Now come to 6, which says fine for non-compliance of provisions relating to accounts and audit. If LLP fails to comply with the provisions of subsection 1 and 2 of and subsection 4 of section 34. So there are 3 non-compliances for which criminal offense continues. Your punishment shall be fine, which shall be not less than 25,000 rupee, but it can go up to 5 lakh rupees, and every designated person of the LLP shall be punishable with a fine which shall not be less than 10,000 rupee and which can go up to 1 lakh rupees. Distinction is that under non-compliance of section 34(3), the ROC will be the adjudicating authority and will levy the penalty. Whereas under subsection 6 for non-compliance of 34(1), 2, 4, the ROC power will not be there. They will have to file a prosecution before the competent court and competent court only will do a trial as per criminal law, and thereafter these fines can be levied. I think that's the point. We should be little cautious. There is one more query. I think somebody was asking again whether the LLP agreement can be amended. Yes, absolutely. There is no restriction. You can amend it any number of time. You can have a supplementary agreement. There is absolute clarity that there is nothing in law that whatever you have agreed cannot be amended. It can be amended with a process what has been prescribed in your agreement itself.
Yeah, it can be amended, modified, but only thing is, again, each time when you amend and modify, it has to be filed with the ROC.
Yeah, absolutely. But interesting part is that I'm sure this part also must have been discussed in the previous 2 sessions. Unlike your memorandum and article of association, which is a public document, LLP agreement is not a public document. So this document remains in a hidden status. If you go and search the document, you will not be able to download any LLP agreement. Yeah, I think somebody has asked the question even. Ashwini was asking. So it is not a public document. LLP agreement you cannot see. Only registrar and the ministry has the power, because with whom you are filing, they have the access and they can use, but general public at large cannot have the inspection of these LLP agreement. So that's
you are actually, yeah, go ahead, please.
So I'm saying that's the power and that's the privilege that's make LLP so very attractive. Still, I think the potential of this particular entity has not been fully exploited. Although I can see the last 4 to 5 years of time, we have seen a growth of number of LLPs, but still it is underutilized. It's such a flexible vehicle for doing a business that in times to come, I'm sure that this will be one of the preferred mode, despite a lot of convergence of provisions of Companies Act, which are now being applied on the LLP also. But still, there are certain unique features which makes it so very distinct and unique. Yeah, Bala sir, go ahead.
Yeah, you are absolutely right. In fact, we discussed this very elaborately, whether in the public document, not a public document. Even there were some interesting questions were there. Some participant has asked, when we go to the bank, bank actually demand a copy of the LLP agreement. Since the LLP agreement is a private document which is between the partners, which is actually signed, how can we actually give to the bank? That was also discussed. Then in which case the answer to that was, bank is not interested what is your partner's rights and duties, etc. and all. They are interested who are the designated person to who deal with the bank. They are interested only the extract of the LLP agreement pertaining to their purpose. That is what we talked about it.
That is what is being done. We are also giving the limited extract, which we say that these are the limited extract of the LLP agreement executed between this and this party and the LLP. And then accordingly, we provide the copy. Although the bank is very insisting, and if there is very special about the LLP agreement, it can be shared also. Means there is no difficulty unless and until you have something very special which you want to hide from the banker for the moment.
Somebody is putting a question, can we liquidate the LLP voluntary under IBC?
Absolutely.
Yeah, it can be done.
It is a corporate, and under section 59, you can very well do the voluntary liquidation, provided the entity is a solvent. Because for section 59, the precondition is that the entity should be solvent. That means you should have the sufficient assets to back the liability.
Yes, Nayan, go ahead.
Now, again, I think someone is asking, once you file. So it is by virtue of law that every document does not, whatever you file in the ministry does not become public document. It is by virtue of the provisions in the law. Like I'll give you the example, in Companies Act also, if you file cost audit report, If cost audit report is a public document, answer is no. So likewise in LLP, also when you file LLP agreement, though it is filed on the MCA portal, but that does not mean that this document becomes public document. By virtue of the provisions in the law itself, this document is restricted for becoming a public document. So it's not available for download.
So can I start, sir?
One more question is there. They are asking if the net worth of the LLP is zero balance sheet not been answered. That's what he's saying. I think, let me see what is the question he has put up actually here. Yeah. What he's saying is here, if the LLP net worth is actually zero, should it limit the scrap value or the amount it? Or can a designated partner take that scrap towards the contribution to wind up the LLP in a zero balance sheet?
No, I think what he is meaning maybe because he's using the word net worth. So net worth may be negative by virtue of the fact that I have a, let's say, a contribution of rupees 1 lakh and my losses are also 1 lakh rupees. So your net worth becomes zero. Now that may be situation. So that is a precondition when you want to strike off the LLP. Same like you are doing for striking off a company. So you have to make a balance sheet zero. So if you achieve that situation, certainly, yes, you can go for winding up also, and you can go for a strike off of that LLP also. There is no restriction. But as far as the voluntary liquidation is concerned under section 59, you have to ensure that the company remains solvent. That's the precondition. If you don't meet the test of solvency, then 59 route you cannot take. Rest winding up provisions of section 271, which are mutatis mutandi applicable on the LLP also, will be applicable to you, but not the voluntary liquidation.
Upon the conversion of the partnership into LLP, do we need to re-execute the agreement, including leave and license agreement, wherein the form had to be heavy stamp duty? Also, how are the assets and property transferred?
I think that's a separate discussion because conversion has many facets, but I can answer very briefly as to what does that mean. See, whenever you convert a partnership firm into LLP, so there is one entity. Partnership firm per se is not a entity which is legally in existence, though it may be registered under the Partnership Act, but that does not give it a legal status. Whereas the limited liability partnership is a separate legal entity, and there are certain powers which are given to the limited liability partnership itself. Now, question comes, are you required to execute the agreement? Agreement can be whether if you have a partnership agreement, now you will be required to have a LLP agreement. Your terms and condition of partnership may continue in the form of LLP agreement. The essence can continue, but certainly it will be a new agreement. There cannot be any doubt that whether the new agreement will not be there. Now, question second part, leave and license agreement. Let us say you have taken some property on lease. There is a concept of what we call de novo. Whenever you enter into, whenever you change the status of an entity, though the contractual liabilities continue. If you have taken a property on lease and you have just converted your partnership firm into a LLP, right? Your course of action is that the parties should agree, all the parties should agree that they want to continue in the same arrangement knowing that this entity has now become a LLP. You cannot claim the benefit on its own, that you have presumed that though the conversion has taken place, but you take it for granted that my agreement was for 30 years and that will continue. The party has to agree. So there will be a concept of acceptance of change of your status by the other party who has given the property on your leave and license basis, wherein the firm has paid heavy stamp duty. So I am sure there is a provision by which you can do the supplementary kind of agreement, and you can save that stamp duty. We need to examine that strictly. Will that scrap takeover by designated partner attract GST? I think I am not able to correlate from which query this follow-up question is.
He is talking about that the net worth becoming the zero and realizing for the scrap. But anyway, that is
So if
nothing
you
to
are
do with
selling
the
the assets to, yeah, absolutely. If you are selling the assets to
anything you
designated-
sell, whatever it is you call GST is attracted. There's
yeah,
no doubt about it.
the only situation that could be that that is provided in the Companies Act also, and when you wind up, when you liquidate the assets, now there could be one way that you create the liquidation state and you realize the liquidation state in form of a cash and then you distribute it to the partners. That is one situation. The second situation could be that there is a immovable property, right? Or there is a asset which you want to distribute between the partners of LLP. As such, income tax law says that in that case, the income tax liability will be on the head of the partners who will be receiving, not on the head of the LLP. As far as the GST law is concerned, again, GST will continue to be applicable in such transfers also. GST is a separate law. Whatever you are required to comply under the GST law, that will be applicable as such. You cannot get any exemption therefrom, unless GST law itself has provided something.
No, GST law doesn't provide anything. Whatever you affect the sale, whatever, whether it is a scrap, otherwise, whatever GST is payable, it is attracted. Yeah.
Yeah.
Yes, right. Move forward.
Thank you, sir. So now moving forward, we are going to discuss about the investigations of affairs of the LLP under the LLP Act and section 43
And
to
just one last question. I think this is Santoshji who is repeating second time this question. Can remuneration to partner and interest on capital allowed to be added in the current account? Yes, why not? It is your prerogative that you are not paying. You don't have a, you don't want. Again, it is what? Even if you pay, there will be a cash flow from the LLP to a partner, and partner will again invest in the LLP in form of a loan, in form of a current account. So whether you want to treat it as a loan or you want to keep it as a without interest, that is your choice. That is a partner's choice. But there is absolute clarity that there is no difficulty that remuneration and interest can be added back to the current account. You may not pay, actually, you may not disburse, but accounting will be that you have paid the remuneration. It will be a debit item in your profit and loss account. On the other hand, it will come as a money added up into your current account or in your loan account, whatever way. First time I am attending. Oh, all right, sir. Thank
CA Parvesh is asking your mobile number.
Yeah,
Prof.
sir. I think that is with Mehta and Mehta. You can please share. No issues on that.
Yes, right.
Then you can move on investigation. I think that's a very interesting part now that is left out. I think we have covered.
Yeah. So section 43 to 54 of the LLP Act 2008 and rules 28 to 31 of the LLP rules 2009. So these provisions empowers the central government to initiate the investigations into the affairs of an LLP. And it is given the mechanism under the Companies Act, and the initiation of the investigation can be based on the orders from the NCLT or a court. So moreover, the partners of the LLP or the LLP itself can apply for an investigation. So the central government, upon being satisfied that circumstances warrant investigation, can also direct the inspection of the books and papers of an investigation through an appointed inspector. So the inspector's power under the, which is appointed by the central government, it is in line with section 206 subsection 5 of the Companies Act, which is made applicable to the LLP via notification number GSR 110 dated 11th February 2022. So it holds the extensive powers, and these includes the authority to inspect the books and documents, summon and enforce the attendance of the individuals for examination under the oath, and inspect LLP books, registers and documents at any location specified by the inspector. So it is noteworthy that regardless of any other prevailing laws, the inspector conducting an inspection or inquiry into the LLP's affair possesses the comprehensive power. So this includes the authority to discover and produce the book of accounts and other documents and examine the individuals on oath. So these measures are essential to address the instances of the mismanagement and irregularities and ensuring the transparency and accountability within the LLP. So let's understand what is outlined in section 43 of the LLP Act regarding the appointment of inspectors to investigate the affairs of an LLP. So 43(1) initiation of an investigation into the affairs of an LLP is facilitated by the central government. So this occurs under the two circumstances. That first is tribunal declaration. If the tribunal either suo motu or upon receiving any application from not less than 1/5 of the total number of the partners of an LLP declares by order that affair of the LLP ought to be investigated. In second circumstances, when if any court or by order it is declared that affairs of an LLP should be investigated. So in both these scenarios, the central government is empowered to appoint one or more competent person as inspector to conduct the investigation and report on the findings in the manner directed by the government. So 43(2) talks about the central government also holds the authority independent of any tribunal or court declaration to appoint one or more competent person as an inspector to investigate into the affairs of an LLP. So these provisions underscores the flexibility and the discretion which is vested with the CG to take a proactive measures in the interest of the LLP and its stakeholders. So in section 43, subsection 3, the appointment of inspectors, which is pursuant to subsection 2, may be made. Like it says the conditions for the appointing inspectors to investigate the affairs of an LLP are specified. Firstly, the appointment may occur if at least 1/5 of the total number of the partners in the LLP submit an application accompanied by the supporting evidence and the prescribed security amount. Alternatively, the LLP itself can initiate the process by submitting an application asserting that an investigation into the affair is warranted. So furthermore, the central government may exercise its authority to appoint the inspector based on the opinion regarding the certain circumstances. So this may include the these circumstances include the situation where the business of the LLP is conducted and with an intent of a defraud creditors, partners, or any other party. So if it is being carried out in a manner which is given by the central government. So the government may also, intervene if it deems that LLP was formed for a fraudulent or the unlawful purpose, or if the affairs of the LLP are not in compliance with the provisions of the LLP Act. So additionally, the central government may initiate an investigation if it receives a report from the registrar or any other investigation or the regulatory agency providing a sufficient reason to believe that inquiry into the affairs of the LLP is necessary. So these criteria ensures a robust and provide a very multi-faceted approach to investigating the matters in the LLP and covering the various scenarios. Now, application by the partners for investigation, it covers under section 44. which says like when the partners of an LLP submit an application under clause A of subsection 1 of section 43, the application must be accompanied by the supporting evidence which is required by the tribunal. So this evidence is very crucial to demonstrate that applicant have substantial reason for requesting the investigations. So the tribunal, in considering such application, has the authority to request if any other specific evidence they may require for the investigation. So the court can ask for that. And furthermore, the central government has played a very crucial role in giving this evaluate the application considering the presented evidence. So now this is the scrutiny requirement, which is under section 43(3)(a) in accordance with clause A of the subsection 3 of section 43 of the LLP Act, which is establishing the framework for requiring applicants to specify the partner seeking an investigation and to furnish the security payment for the investigation cost. So the provision has given the financial commitment in the investigation process. So before appointing any inspector, the tribunal may demand that the applicant provide a security, the amount which is determined based on the prescribed scale, as you can see in the slide, and the scale is designed not to exceed the 25 lakh rupees. And the calculation takes into account various factors to arrive at an appropriate amount that covers the cost which is associated with the investigation. So this chart represents the scales which is offering the security to be submitted and how it is to be calculated.
Somebody has actually put up a question. Is
Mhm.
there any data available for the public to view on MCA's site regarding the LLPs which are either under investigation or already investigated? I think to the best of my knowledge, if we actually go to the MCS site, there is one particular search is available, which I think is showing what are the companies which are recently prosecuted. I think that is available actually according to me.
Yeah, absolutely. I think unless prosecution is initiated, the investigation data as such is not available in the public domain. Now,
Yeah.
maybe if your LLP or company is under inquiry stage or inspection stage or investigation stage, that data is not available. But yes, once the prosecution is initiated, those data are made public from
Yeah,
time.
it is there in MCA. Yeah.
That I would like to ask one question, like one of my client asked about the same, like there are 3 designated partners in an LLP and one designated partner wants to quit the LLP agreement and he don't want to continue, but other 2 partners are not giving the consent and they're not even ready to file the supplementary deed for this resignation. So what the other partner can take, the what precaution he can take and how he can resign from the company without the consent and without filing the supplemental deed. So I think this can be covered under this investigation, or he can file a complaint in the mismanagement.
Nine, if I am not mistaken, I think, correct me if I am wrong, Gupta. In a Companies Act, we had earlier, what you call DAR 12 and DAR 11 for the directors. DAR 12 is actually filed by the company and the DAR 11 is actually filed by the director for the safeguard purposes, which was mandatory. Subsequently, that has been made as voluntary. Similarly, here also, what you raise the question, one of the designated partner want to resign, the other people are not saying, he will be able to file the form directly to the register of companies. I think based on his resignation, register of companies will inquire and he will take it on record. That is what I understand.
So can LLP file the DIR 11?
Not exactly, Nan. I'll just supplement what Bala sir is mentioning. See, the situation of a LLP and situation of a company vis-a-vis from the perspective of director vis-a-vis designated partner is little different. Why it is different? Because I'll just discuss the scenario what Nan is trying to explain. There are 3 partners A, B, C. And I believe that all three are designated partner for the moment. And now maybe LLP has reached to the situation where either it is going to be the state of doing some crime, or they have already committed some crime, or they have committed some fraud, or they have committed some non-compliance, or there is a huge liability which may come. Now, one of the partner wants to run away from the show. That may be one reason why the other two designated partners are perhaps not allowing this particular partner to run away. They are believing that if we have been partner in this LLP, it is for good as well as bad. We will share it all equally or in the agreed ratio, right? That may be one scenario. But again, having said so, how and in what manner the partner can leave the LLP is to be governed by the LLP agreement. Again, your LLP agreement comes into picture. That's become the most vital document. If your LLP agreement is silent, unfortunately, you don't have any remedy available in respect of a situation where you want to resign and your partners are not letting you resign. If your LLP agreement says that any partner can resign and how his contribution will be paid, or how the compensation will be paid to him on his resignation pursuant to his share, if that is provided in your agreement, based on that you will be compensated. Then there is a provision. There are 2-3 things. One is resignation, second is expulsion, third is inheritance. These are the 3 situations which are the most critical one, and unfortunately not dealt very clearly in most of the LLP agreement. That is the reason when the situation of dispute arise, again we are looking here and there and we are not able to provide any solution. If your LLP agreement very clearly talks about the situation, how you will expel. Let us say that partner A is doing some nonsense. He is creating a nuisance in the LLP, and B and C wants to remove A. How they will be able to remove? That has to be provided in your agreement. Now, third situation, A has passed away. B and C are not willing to take legal heirs of A as a partner. We have a confidence in Mr. A. So we have taken Mr. A as a partner, as a designated partner, but we don't have a confidence in A. Type of situations are to be addressed and answered only and only by your LLP agreement. Right? So panacea to all problems of your LLP is in your agreement itself. Now, unless you speak out all these things very clearly, you will end up in a situation where perhaps you don't have any solution. Maybe professionals will also not be able to help out. At last, if the dispute arises, the law says you will be subjected to the law of arbitration. You go to arbitration and get your matter sorted. Investigation and other things are extreme. Maybe why at all, if I want to move out, why I'll invite the parties to do the investigation, to the regulator to do the investigation into my affair? How I am getting remedy? I am getting no remedy. I am only inviting the regulator to come and investigate into the affairs. Does that mean that you will be relieved from the organization? Answer is no. You will continue in the organization. Your right to exit to the organization is dependent on your agreement with your partner. If your partner says that, all right, I am setting you free at any point of time by giving 30 days notice or 3-month notice, you can move out and you will be paid by this formula, you will be having a right available. But not certainly investigation or inspection may not be a solution. This may be the arm twisting that I am threatening to the partners that I'll move forward to the regulator to invite the investigation into the affairs of the LLP, which they may not want, so they may agree to accept your resignation, but that may not be a legal remedy. I hope.
Yeah, you are rightly said actually. Again, we are coming back to the LLP agreement. In fact, in the first time when we discussed this LLP agreement also, we touched upon what you call the LLP actually provide for expulsion, which is not the case in the companies. That also we discussed actually.
Yeah,
In fact, that time also we said, what will be the board of the cessation, resignation, expulsion, circumstances, all the things need to be built in the LLP agreement we said. You again rightly touched upon that same point.
Inheritance is very important because I am looking into currently couple of matters where the death cases are there and the partners are not willing to continue the legal heirs. Unfortunately, there is nothing in the LLP agreement. So we are in a very bad situation if your agreement is not providing. So that becomes your baseline that of LLP with regard to your agreement with the partners.
Yeah, you are absolutely right. Here you say they don't want to take the successor. In some cases, the successor himself doesn't want to join the LLP.
That is also there, correct? So all these things have to be visualized at the time of drafting. Now, maybe the partners who are coming, they are not professional. They don't understand the implication. They simply want a standard document. Only when the situation arises, they will blame you that you have drafted NAN and you have not taken care of this. They will go and blame to the society that NAN has not given us the right advice, so we have not incorporated. But have we asked the right question is the point at the time when we were drafting. So all these things may not be relevant at the time of drafting, but are important to be kept in mind and to be discussed and documented.
Now, coming to your question, probably I will usually they have to go to the arbitration. Yeah.
Thank you, sir.
Yeah, move forward.
So now let's explore section 46 of the Limited Liability Act, which covers the specific powers which is given upon the inspectors appointed by the CG and allowing them to extend their investigation into the affairs of the entities which is associated with the LLP partners and the designated partners. So section 46 talks about an inspector which is appointed by the central government. It's necessary to, look into the affairs of the entity which is previously associated or currently associated with the LLP and or any present or a former partner or a designated partner of the LLP, they are granted the authority to do so. So the inspector is empowered to report on the affairs of the related entity, partner or designated partner to the extent that the result of this investigations are relevant to the primary inquiry into the affairs of the LLP. However, if in exercising this power, is bound by the crucial requirement which is outlined in subsection 2, and before investigating and reporting of the related entity, the partner and the designated partner, the inspector must obtain a prior approval of the central government, and this adds a layer of oversight and ensures that such investigations are conducted with the careful consideration and the authorization. So the CG, before granting any approval, is obligated to provide the entity partner or the designated partner with a reasonable opportunity to present their case and show cause why approval should not be accorded. So this procedural safeguard ensures the fairness and due process in the investigation proceedings. And section 47 of the LLP Act, which outlines the obligations of designated partners and partners during an investigation and authority which is granted to the inspector to gather the information from the entities beyond the LLP. So the duty of designated partners and partners has been outlined in section 47, subsection 1. So during an investigation, the designated partners of the LLP are entrusted with the specific duties for preservation and the production. So they are obliged to preserve and produce upon the request by the inspector or any authorized person the prior approval of the CG, all the book of accounts related to the LLP or any other associated entity that are in their custody or control. So additionally, they can also ask to provide all the reasonable assistance to the inspector in connection with the investigation. So this cooperation approach ensures the smoother investigation process. Section 47, subsection 2 talks about the inspector with the prior approval of the CG is empowered to seek the different information from the entities other than those directly affiliated with the LLP, which is mentioned in subsection 1. The inspector can require any external entity to furnish the information or produce the relevant books and papers. So this authority ensures that the investigation can extend to the entities associated with the LLP. So broadening the scope to gather the comprehensive and necessary information. So now comes the section 47, subsection 3. The inspector, in this, the inspector can ask in his custody any books and papers which is produced under section 1 or subsection 2 for the 30 days. And thereafter, he shall return the same to the LLP and other entity or individual by whom or on whose behalf the books and papers are produced. And during the examination which is conducted under subsection 4, the notes are taken in writing, which is signed by the person who is examining an oath and providing such a copy to the individual who is examining the books. So these notes, once signed, serve as an evidence to the investigation. And here you can see that the 47.4, where the inspector can hold the authority to examine the individual and oath, which is including the persons referred to in subsection 1 and with the prior approval of the CG. And the inspector can administer the individuals for the personal appearances and question them as and when required. Subsection 5 outlines the penalties for non-compliances. If any person fails without reasonable cause or refuses to produce those documents, furnish necessary information, appear for the examination, or sign the examination notes, so they may face the consequences. This is section 40 covers the seizure of documents by the inspector. So moving on, section 48 of the LLP Act. So this section empowers the inspector to take the action in situation when there is a reasonable belief that the crucial documents may be at risk of destruction, alteration, or the concealment. In sub-regulation 48.1, in the course of an investigation, if the inspector has reasonable grounds to believe that books and papers related to the limited liability partnership may be at a risk of destruction, mutilation or alteration, or maybe concealment, then he can take up proactive measures. After the careful consideration of the applicant, if deemed necessary, hearing from the inspector, under section 48, subsection 2, the magistrate may issue an order authorizing the inspector to enter the place or places where the identified books and papers are kept and conduct a search in accordance with the specified manner in the order. So seize the books and papers deemed necessary for the ongoing investigation. So 48.3 talks about the inspector shall keep his book custody, the books and papers which is seized under this section for such a period not later than the conclusion of the investigation as he considered necessary, and therefore shall return the same to the entity or a person from whom the custody and a power they have seized from migrate of such return. And section 48, subsection 4 covers the search and seizure protocol. The conduct of search and seizure under section 48, it is outlined as per the CRPC Act 1973. So this ensures that the procedures is aligned with establishing the legal standards and principles which is governing under such action. So inspector's report obligation says inspectors appointed by the CG possesses the authority and if directed such submit interim report during the investigation, and upon the investigation's conclusion inspectors are mandated to furnish a comprehensive final report to the CG. The format of the report, whether written or printed, is subject to the directive of the central government. So the prosecution on the basis of the inspection report, if from the report under section 49, it appears to the central government that any person in relation to the LLP or in relation to any other entity whose affairs have been investigation and has been guilty of such an offence for which he is liable, the CG may prosecute such person for the offence. And it shall be the duty of all the partner, designated partner, and other employee and agents of the LLP to assist in connection with the prosecution, which is reasonably. Section 51 talks about the application for the winding up of the LLP of LLP. If any such LLP is liable to be wound up under this act or any other law for the time being in force, it appears and that the CG from any such report under section 49 that is expedient to do so by reason for any such circumstances or referred to in sub clause 1 or sub clause 2 of clause C of section 43, the CG may, unless the LLP is already being wound up by the tribunal. So cause to be presented to the tribunal by any person which is authorized by the CG in this behalf. If a petition for the winding up of the LLP on the grounds that it is just and equitable, that it should be wound up. So the proceedings for the recovery of damages or the property, if from any report under section 49, it appears that the CG that proceeding ought in the public interest. So for the recovery of damages in respect of any fraud, misfeasance or other misconduct in connection with the promotion or a formation or the management, such LLP or such entity or for the recovery of any property of such LLP and which has been misapplied or wrongfully retained, the CG may itself bring the proceedings for that purpose. The expenses and incidental to an investigation by the inspector appointed by the CG under this act shall defrayed in the first instance of the CG, but the following person shall, to the extent mentioned below, to be liable to reimburse the CG in respect of such expenses, which is any person who is convicted on a prosecution, who is ordered to pay the damages or restore any property in proceedings brought by virtue of section 52. In the same proceeding to be ordered and pay the said expenses to such an extent as may be specified in the code, convicting such person or ordering him to pay such damages and restores the such property as the case may be. So any entity whose name proceedings are brought as a fraud aforesaid shall be liable to the extent of the amount or the value of any sums or a property recovered by it as a result of the proceedings, and unless as a result of the investigation a prosecution is instituted in pursuance of section 50. Any entity, a partner or a designated partner or other partner deal with the report of the inspector shall be liable to reimburse the CG in respect of the whole of the expenses unless and except in so far the CG otherwise directs. So amount can be recovered as area of a land revenue. The amount of the expenses in respect of which any LLP, other entity or a partner or designated partner or other person is liable under subclause 1 of clause C of subsection 1 to reimburse the CG shall be recoverable as an area of the land revenue. And cost of investigation includes the expenses of the litigation. For the purpose of this section, any cost or expense incurred by the central government or in connection with the proceedings brought by the virtue of section 52 shall be treated as an expense of the investigation giving rise to the proceedings. In section 54, inspectors report to be evidence. A copy of any report inspector or inspector appoints under the provision of this act, the authenticated in such a manner, if any as may be prescribed, shall be admissible in any legal proceedings as evidence in relation to any matter which is contained in the report. For this purpose of section 54, a copy of the report of the inspector shall be authenticated by the common seal and by the certificate of the public officer which is having a custody of the report. So these are some of the
yeah, go ahead.
Yeah, so these are some of the facts on disclosure, the audit, and the filing requirements, like whether every LLP would be required to maintain and file the accounts. An LLP which is under the obligation to maintain the annual accounts reflecting the true and fair view of its statement of affairs, and in prescribed form shall be filed by every LLP with the registrar every year. So should I continue with these questions or?
I think then we can take a pause. You have
Okay.
beautifully articulated the entire inspection, investigation, provision for the last 15-20 minutes. I'll just take maybe another 5-10 minutes to summarize what Nan has explained. Maybe it is giving shivers to all the professionals, as if looks like the regulator is behind every LLP to investigate. That may not be true. We need to, as a professional, we need to understand what rights the regulator has in respect of respective proceedings. I will touch upon the provisions from the Companies Act 2013 perspective, because majority of the provisions have now been mutatis mutandi made applicable on the LLP also, wide certain notifications what Nayan was explaining. So it is easy because we all have been dealing with the provisions of the Companies Act more frequently than the provisions of limited liability partnership. So we should understand clearly the distinction between inquiry, between inspection, and between investigation. These are three I's which are very favorite of the regulators, especially the Ministry of Corporate Affairs. Now, what is the scope of inquiry? If I can quote unquote provisions of section 206, which deals with inquiry. And there are also two provisions, inquiry under 2061, and then there is an inquiry under section 2064. Is there a difference between these two inquiries? Then we should understand when inspection can be ordered, who can do the inspection, whether there is any specific authority approval required for conducting the inspection. Similarly, what is the objective of investigation? And lastly, she also touched upon search and seizure. Do registrar of companies, do the ministry people really have the power to walk into any premises of the registered office of any company or LLP and do the search and seize the document? If yes, then in what situation? And lastly, what is the overall objective of investigation? See, objective has to be there. Without objective, investigation is what? Futile. So let us start with understanding the basic of nothing but in the 56th law also it was there, and it is there in the LLP Act also, which is a 2061 is a very basic scrutiny, the inquiry on the documents what you submit. Let us say you have submitted LLP form 8 or you have submitted LLP form 11, and there is somebody, maybe a creditor, maybe a partner, maybe a designated partner, who has complained that the form which has been submitted with the registrar is factually incorrect, or there are certain discrepancies, the attachments are not correct. Maybe auditor is a whistleblower or employee is a whistleblower. It can come from anywhere from the society, right? If scrutiny on any document what has been submitted is initiated on the basis of the complaint which has been received, or the registrar on his own form the opinion. While he is approving the form, he finds certain discrepancies. So he forms an opinion on his own that certain information or explanation is required. Then he may direct the LLP and its designated partner to furnish these information and explanation in writing. Or they may also direct to produce certain documents by giving a specified time. That in 15 days of time you are required to provide this information. So these are the scope of section 2061. Now, when it comes to obviously what the company has to do, LLP has to do, LLP will take cognizance of the said letter. If they feel that the time provided for providing that information is less, you need little more time, then you can submit a request to the registrar concerned and you may seek extension of time, maybe by another week time or 15. That has to be reasonable. That cannot be unreasonable again. Now, 2064. In 2064, again it is an inquiry, but registrar has to satisfy himself on the basis of information which are available to him or representations which are made by the other party, and the element of fraud or unlawful purpose has to be established. He has to convince himself, he has to form an opinion either on his own or on the basis of information which has been supplied. Maybe it may happen so that inquiry started under section 2061 but turned into 2064, because at the time when 2061 started, there is no requirement of unlawful purpose or fraud. Whereas for 2064, the opinion with regard to the existence of fraudulent purpose or unlawful purpose or non-compliance of the provisions of law or non-redressal of grievance of any investor. I can tell upon one of the situation where LLP was used as a conduit for taking the money, because now acceptance of deposit rules restrict the person from collecting the money from the public. What the modus operandi this gentleman has done, he has formed LLPs, multiple LLPs, and making these investors as a partner, and then channelizing the money to a private limited company for the purpose of raising the fund. And thousands of crore has been raised by using this mechanism. So in such situation, and investors had made a complaint that their money is duped, they have been made promises that they will be provided this kind of return, and no return has been provided, and money has also been lost in between. Then 2064 is a fit case and the 2064 can be invoked. But for both of these situations, the registrar has to record the reasons in writing. He has to record in the note sheet that as to why he is initiating the inquiry under 2064 or 2061, which is a document which can be provided through the Right to Information Act also, because this is a document which is available during the course of Right to Information Act exercise. Now, once we have understood these two parts, third part, which is the inspection, while 2061 and 2064 can be initiated by the registrar on his own, no approval of ministry is required. Inspection cannot be initiated unless and until you have the approval of competent authority. And competent authority may be regional director, competent authority may be your Ministry of Corporate Affairs. Similarly, for the case of LLP. So maybe it is not necessary that you start with 2061, then you reach to 206. You can come directly to 2065 also, or you may come to 2064 directly also, or vice versa. It depends the situation of a company or LLP, but it is clear that if you are initiating the process of inspection of books and papers of a LLP or a company, you need the approval of Ministry of Corporate Affairs competent authority. And what happens? Generally, the registrars have been made inspector. For the purpose of doing this inspection, they have been vested with powers of a civil court. They have been vested with the power to summon the people, to call upon the people, to take the statements and records on oath. And these can be presented before the court of law during the course of investigation as evidence against you. They can do the interrogation. They can do the recording of your statement. So these powers, the inspection power is very vital as far as the provisions of triple I are concerned, inspection, inquiry, and investigation. So this second part, which is inspection, which is when the inspection will be ordered, just think of. It may happen so that the process started with 2061, that you have filed some Form 8, wherein certain discrepancies were noticed. So ROC on its own or on the complaint of some person asked you to provide certain documents. Now you, instead of providing certain documents, you are delaying the process. You are saying ki kindly grant 15 days time. And after 15 days time expire, you say kindly grant 15 more days time. And you are delaying the process and you are not coming forward for giving a reply. And the public interest is getting affected because you are not replying. So they are not able to conclude whether there is anything wrong on your part or not. What ROC will do, ROC will file a permission, a request for seeking permission under section 2065 to the competent authority to make the inspection of books and papers of a company, where the powers are little more wider than the powers under section 2061 or 2064. Then he will do the summoning. He may ask the person to come to his office. He may ask the person to provide certain documents, records. He may inspect the minute book. He may inspect the books of accounts, whatever. And mind you, 2067 is very important. That says that if a LLP or company fails to provide these information or explanation or produce any document, the LLP company and every officer thereof who is in default, he will be punishable with criminal liability. This is not civil dispute. This is a criminal liability, and matter may be filed before the competent court of law. And fine up to rupees 1 lakh. And if you continue to default, additional fine which may extend to 500 rupee for each day during which the default continues. This is the scope of inspection. This is the provision which can come, and how the inspection will be carried out. As I mentioned, I think Nayan also has explained certain provisions as to how the inspection has to be carried out and what are the powers with regard to the same. I'll just repeat for sake of clarity that what powers the inspector has. A, he can take copies of books of accounts. He may ask you to come with copies of books of account. He can ask you to produce those copies. He can take record. Now, he can place or cause to be placed mark of any identification. Like if you produce the books of accounts or minutes, he may put his initials that inspected on so and so date, so that you cannot do falsification tomorrow. You cannot go back and change the books of accounts. He may put any remarks thereon, so that authenticity tomorrow, if required during the course of investigation, those books of accounts, those statutory records can be produced as it is. This is one part. Second, as I explained, there are certain challenges, like unless I ask the person to come before me, I'll not be able to know whether you are a shell company or not, whether you are a shell LLP or not, whether you are a shell entity or not. These things can be known only by interrogating a person. If you have made your driver, if you have made your peon a dummy designated partner in your entity in which you are doing a bungling, now because you didn't wanted to surface your name anywhere in that particular entity. So you have made a small contribution in the name of your peon, in the name of your driver, who are the designated partners. Now, if these designated partners are asked to come through the inspector by making a summon, you will immediately after doing the interrogation, he himself may admit that, sir or madam, I don't know anything about that. My role is, I am the driver of a company. I don't know in which company my name is given. So these kind of summoning are really very helpful. And third, as she was also mentioning, that the inspector even has the power of criminal procedure, the inspection which is carried out. So these records, whatever you are creating today, now maybe what is done, you are taking the statement on oath, you are asking a question. I am an inspector, I'll ask certain question, I'll frame those questions, then and there you are not allowed to leave the premises unless that process is complete. Of course, you can take the aid of professional who can be present during the course of this interrogation, but you will be required to give those answers, but only those answers which you are aware in your personal knowledge, which is your personal knowledge, not something which is in the knowledge of LLP. Let us say I was a partner, I was a designated partner of a LLP maybe 5 years back. Today investigation starts and I am also being summoned. And the inspector is asking me to provide certain information which I am not privy to, which may be pertaining to the year 5 years ago, but I don't recall because I am not handy with those documents. I may simply take an excuse that I am not remembering those data, but if I am provided those information, I can certainly vouch whether I have signed these statements or not, or whether these statements are correct or not. So inspectors are also smart. So what they do is they will keep those copies handy and they will ask you to confirm whether you have signed or not, whether these signs are yours or not. Now, so you have to be prepared when you are visiting for supporting to any of the designated partner or LLP on their behalf for the purpose of the inspection. And mind you, the provisions in respect of non-compliance of the orders, if you don't present your criminal offense. And the consequence, which now extend to even LLP also, is that you can be barred from becoming a director for a lifetime or a designated partner for a lifetime. 2074, if I remember correctly, is a provision which is draconian, that if you have been summoned, so don't take it lightly. Don't misunderstand that, अरे ये तो registrar ने बुलाया है, maybe I go or not go, I will go and meet him casually. No. If the registrar, if the inspector has summoned you, whatever you have to say, good or bad, right or wrong, whatever you know to in your personal knowledge, you should adhere and you should go and present the facts correctly. Because as I mentioned, the consequences are very fatal. You may end up vacating the office as a designated partner. You may end up vacating the office as a director, in addition to the penal consequences, and you may be barred as a director or designated partner, which is I think so very draconian. Now, what will happen after inspection? Anything has to be logically concluded. Inspection can result into either interim report or it can be in final report. I have done inspection and I am through with all the findings, and I may present my report to the ministry. And now ministry can decide whether the investigation has to be ordered, A, or if no investigation is required, they may order prosecution directly. They are convinced that yes, whatever findings are there, they are grave in nature, and the prosecution needs to be launched against the LLP or the partners. Then that can be. So logical conclusion of that process is important. So the consequence can be interim report, permission to do the investigation. Now investigation can also be in two parts. One investigation under section 210 and one investigation through SFIO under 212. Or it can be a final report with the prosecution recommendation. Here it is important that whenever the inspection is done and report is issued, the inspector or the registrar, who is generally the same person, can also adjudicate the offense which are civil in nature. As we discussed the distinction, wherever the penalty word is coming, the report is generally provided in the four part. A, which is the power of ministry. B, which is the power of some committee. C is the power of regional director. D is the power of the registrar. So if any consequence which is falling in D, the action can be initiated by the registrar himself. However, report still will be required to be made. It is not that inspection will be carried out and no report will be submitted to the ministry. You cannot manage. Report will be submitted. Report may be submitted in a manner that, yes, we have completed the inspection. We have found these 10 offenses, of which 8 offenses are civil in nature, and we have completed the adjudication proceeding and penalties have been levied. These 2 offenses are criminal in nature. We seek your permission to initiate the prosecution before the competent court, or we need the investigation to be carried out under 210 or 212. That may be the prayer in the form of interim report or the final report. Before we come to investigation, which we will discuss, meanwhile we take a pause. Many people are having a apprehension that the registrar may come anytime and inspect my registered office. This is half true only. This is not full true. he can only, the power which has been given under the
Hello?
Companies Act, sir,
Okay.
you want, uh, you want to say something, sir?
Yeah.
All right. I think he's on call. So I was saying, this is a misunderstanding many a times that the registrar has a power to do search and seizure. Even ministry does not has the power to do the search and seizure. Limited.
Amit, I think we need to little bit close it because probably we are almost 140.
I will
Yeah.
not take more than next 5 minutes. I'll close now because I'll just touch upon the search and seizure, then investigation, and
Okay.
we'll
Okay.
close.
Okay.
I'll just sum up because I thought, because investigation, what Nayan has discussed is a very important part for all of us, and especially now when everything is going in the STP mode, the registrars will be initiating more and more inspection, inquiry, and investigation. So I'll just touch upon the last part.
Sure.
Of course, I know this triple I is a separate subject, and you may be having a separate session, or you may already have also. So I was mentioning that search and seizure power is not with any ministry or registrar. What they have to do, they have to move an application to the magistrate or to the special court. In the case of a company, it is a special court, or in the case of LLP, it is a magistrate competent to seek a permission to do the search and seizure. Once the permission is accorded, which generally is accorded, then they will be able to come to your office like search power under the income tax law. Similarly, they will seize the record. They may take the record. And that's what Nan was mentioning. They can keep these records for 180 days. And if needed, then further time may be extended. They may put their remarks, they may put their comments, whatever they want, they can keep. And these comments can be done. Now, investigation is the last part. And as I mentioned, investigation can be under 210 or under 212. 212, sorry. 212 is a SFIO, where now how to distinguish between these two? Distinction is with regard to the quantum, with regard to the size, the operations, the quantum of fraud expected, the quantum of other entities involvement, and quantum of other laws which are involved. See, SFIO is a multidisciplinary inspecting authority, investigating agency. Multidisciplinary means finance is also involved, accounts is also involved, PMLA may also be involved, the taxation may also be involved. Whereas 210 may be a plain vanilla violations relating to the Companies Act or the fraud as is envisaged under the provisions of the Companies Act. That is the primary distinction. But one point is very clear. Investigation is always initiated with the hypothesis. Hypothesis is what? Hypothesis is that you have created one belief. And belief is that this company is running its affair in the fraudulent manner, or they have siphoned the money, or this is a shell entity, or they are doing a wrongful business. Then to check that hypothesis may be tested on the records, on the statements, and if found true, then it has to be concluded with a logical prosecution, logical conclusion. So the consequence may be that you have a hypothesis. After doing investigation, you came to know that the hypothesis was wrong. So investigation concluded, report is positive that there is hypothesis wrong and no investigation, no prosecution is required. Or it may turn out that hypothesis is right. Maybe there is only one hypothesis which was saying there is one default, whereas there are 100 more defaults, and the prosecution can accordingly be initiated. I think this is the long and short of the investigation, inspection, inquiry, search and seizure. Very briefly, to the extent I think it was relevant for all of us, and Nayan has guided us that the cost of inspection, investigation may be recovered from the applicant. So you have to be a little cautious that if you are a designated partner and you want to initiate the investigation against a company and your contribution is large enough, up to 25 lakh rupees cost may be recovered from you. So you have to be little mindful whenever you are trying to initiate any such kind of complaint against any designated partner. I think I will take a pause over here, and if there are any questions, then I'll be happy to answer.
I think there are only two questions which are there actually. LLP started with some object, which is not happening. They turned into some other object, what auditors should do. I think auditors should actually disclose. Second thing is LLP need to modify their agreement if their object is different. That is the only way.
Now,
There's
one
a-
point of caution, Bala sir, is that LLP is not allowed to do the NBFC activity.
Yeah,
So if you are engaged in only investment activities, that you are having only investment in your shares or you have given only advances, then it may happen so that you are violating the provisions of RBI, and 45 IA may be violated. So you have to be little cautious that
yeah, if it is investment, yes, it is.
so you should not end up doing the other violation, because NBFC license you are not allowed, and NBFC activities you cannot carry. So the way the question is asked, I am understanding. it
Yeah,
may
if
turn
it
out to
is
be
the investment, yes.
Yeah.
One more thing is, it is in continuation of this expulsion of the partner want to resign. He says the situation LLP can be wound out or taken over by the new LLP, or amicable partners are expelling the unwanted partner. Anyway, that is a suggestion. But anyway, they have to take a
That is
call.
an
Otherwise,
option
we have to
available.
go.
I agree, Bala sir, that
Yeah.
may be an option available, but in all cases, winding up of LLP and taking over of the LLP by another LLP may not be possible, because let's say there is a immovable property which is held up in the old LLP. Now again, you
Correct.
transfer it to the new LLP, that means additional stamp duty implication. So that may not be feasible solution in all cases, but yes, if that is the option which is available, which you want to use, yes, you can explore that also.
I think that's all the questions which are there. I think we have answered. Now I must definitely give my special thanks to Mr. Amit, because we are well over 145 now. Our time is supposed to be 1. Now we are at 145. Still present, which shows the importance of the topic. Many thanks to you for sharing your practical view. You added really a lot of things today to our knowledge. I am sure our people are much benefited actually. And coming to 9, she has presented excellently, very lucid language, putting up everything together. My special thanks to her. In spite of her ill health, she has been actually suffering with the fever and cold and cough, etc. She managed to do all the things. Hats off to 9. I think with this, we will end up the session, I believe. Ashwini, you want to say something?
No, sir. No, sir.
Okay. Then we'll close the session. We'll meet the next session next Saturday. Thank you.
Thank you, sir.
Sir, thank you.
Thank you very much once again, Amit.
Thank you, Ashwini.
Thank you, sir.